people.
But I suppose I know there'll be no repercussions ultimately because the next day everyone's gone, so there's not going to be mourning families.
But then how dare you deprive that person of his last 8 hours or 10 hours of life?
I don't care because it's the last day on Earth.
What would you do?
I've always wanted to kick a duck up the arse.
Investors clearly want to kick this black swan up the... We discussed in the previous video the underlying issues with the economy, and we also discussed in October 2019 how inflows to gold, mining stocks and gold ETFs are at on-year all-time highs. Other countries are hoarding gold. CEOs know it's about to pop. They want the stock market to be propped up quietly for as long as possible so they can exit. They want to convince the dumb money that there's no recession, so they'll FOMO in and buy their bags. Speaking of CEOs, here's some stats to chew on. More than 1,200 CEOs left their positions in 2019, which was a record year for exits. In January 2020, 219 CEOs left their positions, which is also a record. Lots of investors are panicking and it has been a bloodbath, with the S&P 500 continuing to tank. There are also worrying reports that bears are coming out of hibernation early. Let's take a look at the thoughts of Chamath Palihapitiya, a former Facebook executive and billionaire whose fund has delivered the following returns.
You said earlier that we're nowhere near a bottom. Those were your words. When do you think we get there, and how are you going to know when we are there?
Well, bottoms are not created 18 days after something like this starts. So you can go back in time and look at every meaningful drawdown in the market.
Let's have a look at those historical drawdowns, and we can see here in red the current sell-off. This is now the fastest bear market after an all-time high in history. So we can see therefore that the pain could be said to continue for a while longer. In addition to this event could be catastrophic for particular industries, the travel industry being a prime example.
The GDP. So, for example, if you just look at travel, the travel industry and all its related interconnected businesses, are almost $9 trillion of the world's economy. Now, if you think you see travel trade off by 50 to 60% for 2 quarters, that's 5% of the world's GDP that's going to go up in smoke.
But how long could these effects last?
And so these knock-on effects, I think, are multi-month. They're probably multi-quarter. And again, I go back to how I started. In the absence of massive and decisive federal intervention that creates confidence in the markets, it has the potential to be multi-year.
You can't be serious, man. You cannot be serious!
But seriously, how long could the pain last?
The rancor and the partisanship ends today, and people really in the federal bureaucracy figure this out. But if they don't, then the drawdown, I think, tip to tail, will be as bad as the great financial crisis, except, unlike it, we're not going to see some clever, cute V-shaped recovery. We're going to see what we saw after the dot-com bubble burst, which is years of malaise.
Crashit. Activat quantum immortality.
Okay, in all seriousness, it does seem that the downside will continue. This virus is very serious stuff, and it is important to have cash and liquidity at this time. One of the traditional hedging assets, gold, has also plunged, apparently because hedge funds needed to cover margin calls. In my opinion, and disclaimer, this is not investment advice, in the very short term, cash is king. In the short to medium term, I would expect gold and silver to do pretty well in the 1 to 3 year time frame. In terms of a general approach for stocks, dollar cost averaging in a bear market is generally the way to go. The question is, how low could we go? Well, Chamath thinks a correction of the same level as 08 is possible, indicating that the S&P could hit 1500 to 2000. On a more qualitative basis, when Warren Buffett starts to buy back in big, you can assume that it's not a bad time to buy. On the longer term time frame, 5 to 10 years, another asset that has had a terrible time recently is Bitcoin. Bitcoin is essentially a hedge against excessive fiat printing.
This is a fantastic fundamental hedge and store of value against autocratic regimes and banking infrastructure that we know is corrosive to how the world needs to work properly. You cannot have central banks infinitely printing currency. You cannot have folks with, misguided and misdirected monetary and fiscal policy.
The response to this situation is likely to involve a lot of fiat printing. Therefore, it's worthwhile to at least consider the possibility that this asset is undervalued in the long term. For more compounded valuable content, subscribe and like.